Hey everybody, it's Seth from Everything Money. Welcome to the show. We're doing L brands today, and of course they own Victoria's Secret. So we were just laughing to ourselves that the thumbnail, which I'll be making, Paul, will have you in like some black leather and a ball gag because you're really into like a steamy thing. We're talking about L brand today. This is a huge retail out of Columbus, Ohio, very near and dear to our heart. We're in Akron. I lived in Columbus for the past 16 years, Paul. They have Victoria's Secret, Bath and Body Works. Now, I thought Victoria's Secret was having some trouble.
I thought they were having trouble too.
This company is very famous. If you've heard of this guy, Les Wexner, he got a little handsy with Epstein.
Well, we don't know if he got handsy with Epstein.
Allegedly speaking, Paul, you know what I'm talking about.
Well, you have to say allegedly.
I just didn't I?
So you didn't watch that 9/11 joke, Chris Stefano thing, and allegedly, like, you have to understand my father. He speaks like a criminal. He goes, my son allegedly took a chair and hit a kid in the head.
Today we're talking about L brands. We're going to look at the company, look at the stock. Why is the stock a certain price? What are the fundamentals behind this company? And is this stock price justified versus like the amount of money they make? I'm looking at some early numbers, Paul, and maybe that's the case. It got blasted last year during COVID. The stock went down to $9. It's currently at $65.
Whoa!
But we're trying to teach you that it's not about the ticker price. It's about the company behind the ticker price, and we'll do that right now, Paul. Let's talk about L brands.
Now, remember, I have not looked at this company at all. You know, our last video we did was Intel, and I was a big fan of Intel because I'd looked at it for a long time.
Yes.
I've not looked at L brands at all. I tend to avoid those kind of retailers that I haven't seen with a big online presence, but let's go look at it. So here we are in the Everything Money Trustee software you can have for 80 cents per day. Okay, it has a description down below. L brands, a women's intimate personal care and beauty retailer operating under Victoria's Secret, Pink, and Bath and Body Works. Great. Okay, so $18 billion market cap. PE of 12.9, check mark, with a profit margin of 11. All right, that's pretty high for a retailer, right?
I mean, they do charge like
$1 billion.
$90 for a bra. So I mean, they're making chatter. Go ahead.
How much did you pay for your thong?
The one I'm wearing right now?
Remember when Jason Giambi used to, when he was in a slump, he would put a thong on from there?
I did not know this. Are you kidding?
Yeah, anytime he was in a slump, he would put a gold thong on, and he would like always have an extra base hit that game.
I'd get way too much chafing with them things. I don't know how my wife does it, but keep going, Paul.
All right. So one thing, a no dividend, but look at this, guys. A pretty high return on assets, 13%. Whenever you can see a double-digit return on assets, YOLO.
Revenue growth over the past 5 years is pillar number 3, Paul.
All right, not much revenue growth, guys. 12.4 to 13.2. It is a check mark, but it's not much there, so, oh well. Profit growth over the last 5 years, 1.1 to 1.4. Look at this abysmal year last year they have. They lost $700 million, which is understandable. And then shares outstanding. Okay, it's down. This is good. 286 million down to 279. Only increased their shares last year by 2 million during the downturn. All right, so that's not bad. So far here, we have all checks.
5 straight checks, yeah.
Right?
With a surprising profit margin check of 11%, right?
Correct.
Wouldn't you think it's a little lower for clothing like this?
I mean, retail, but they manufacture their own stuff. I don't know. It's just, we tend to see below 10% on retailers. Now, this software is incredible, guys. You see this back here? You can have the software for 80 cents per day. Less than $1 a day gets you the software. It has so many attributes and it's growing. It has a Discord channel with over 3,100 people in it right now. Properly organized, though, it's not overwhelming. There's different chats for different sectors, different trading styles, different investing styles, etc. You can join this for under $1 a day, 80 cents per day, folks. The price is going up every single month. Don't be lame. Literally, if you take any sort of investing seriously, this is the right thing for you because it allows you to learn about fundamentals, learn about day trading with our good friend Trader Mo over there. And yeah, I mean, I'm going to plug it till the day I die because it's been absolutely incredible for us and it's awesome.
Yeah, we hear people all over the world, Paul. It's amazing. We have people in, we're huge in Latvia, South Korea. We have people in Australia. They're in the Patreon and they're all talking. So if you feel alone out there and you need some help in terms of following some of these companies and learning what to invest in, obviously you can watch our channels and get in that Discord. So keep going, Paul.
I get so many, like, on Instagram. Follow me on Instagram. On Instagram, I get so many messages with people. Hey, Paul, hi from Czech Republic, or hi from Austria, or hi from. I'm just like, oh, what's up, guys? Like, it's so
crazy.
funny. Although yesterday I got a comment like, Paul, I thought I was gonna get business stuff on your Instagram. No, it's all pretty much my dogs and my personal life, and that's it.
Pillar number 6 is current assets over current liabilities for L brands.
So 4.6 billion in current assets, 2.68 billion in current liabilities. That's pretty solid. Plenty of cash on hand to pay off their current dets.
Pillar number 7 is free cash flow.
So free cash flow, 1.07 billion to 2.4 billion. Check mark there. So Seth, I need your help here on an average here. So 1.07. Let's call it 1.62, and 8 is 2.4, and 600 is 3, and 5.4 divided by 5 is 1.1 billion. Let's call it $1 billion to be safe.
This is the average free cash flow over the past 5 years.
Yeah, times 20, because that's our multiple we talk about. Why do we pick 20? It's a starting point. If you have increasing free cash flow and some growth potential, you should be willing to pay a higher premium on an average of 5 years. If the future growth potential is lower, you should pay less. But our metric right now is 20, and it's $20 billion, and it's currently an $18 billion company, so it's a check mark there. So we have all 8 checks here, don't we?
That's true, all 8 checks. Yeah.
Wow. So for those of you who don't want to do the work, which I don't blame you, on our software for 80 cents a day, every stock will give you the check marks and the X's. Now, I will say this. I don't believe in paying 20 times free cash flow for this business. I think there's a lot of headwinds for this retailer. You have to do more research on what is their plan for online sales to really grow it. You saw stagnation in their sales overall. Go see how much of their sales increases were from any acquisitions of any smaller brands versus actual growth, et cetera. So I would keep this on my radar, though, because, I mean, if this thing falls, I mean, man, it was selling for $7 a share.
Are there any Victoria's Secret stores that are not in a mall that you've ever seen?
No, they're all malls.
Yeah. So with malls being maybe an issue going into the future, that's something to think about.
Yep.
Yeah.
Bath and Body Works is not. Yeah.
No, Bath and Body Works is in only.
They're both.
Oh, do
both.
they?
Yeah.
But look at the revenue since 2012. There's not much revenue growth, guys. We're talking about a 10-year period here.
Yeah.
13. We're talking about not even a 30% increase over a 10-year period.
Yeah.
So they're not even keeping up with. And this assumes no acquisitions along the way. I think there are acquisitions along the way. So you look at this saying, is it really?
Yeah, that would be my concern.
I would be a buyer of this company if they had a strategic plan for buying back more shares and you believe that the cash flow stability is there. But they got to use that money to buy back shares if they really believe in the long term. I mean, look at Best Buy, though. Best Buy is a company that was struggling for a few years, and they turned it around completely. And now Best Buy is a leading retailer, right?
Yeah.
But in Best Buy, it's nice to walk into Best Buy and get somebody to talk to you and say, here's why you should buy this product.
Right.
And we'll match Amazon prices.
Right.
When I want to buy a TV, I can't go to Amazon.com and say, hey, can I get somebody to help me? Now, is that a possibility for the future? Absolutely. But with Best Buy, I can walk in, I can get a nice guy in a blue shirt or a nice gal in a blue shirt saying, hey, here's why you should buy this TV, you moron, because it has 8K versus 4K. Oh, thank you. So, and they'll match all of Amazon prices. With Victoria's Secret, Pink, I mean, who's going in there to say, hey, will this chafe or will this not? I don't know. I've never been in one of those stores before in my life because I just.
Les Wexner retired from this company last year as CEO and chairman.
Because he was kind of forced out.
In March, he sold 3 million shares for a total of $178 million. And just 2 days ago, he sold another 5 million shares for $325 million.
He's getting out of there.
Well, he's older.
His house is awesome.
Yeah, he's older. He's probably trying to do estate planning things, and he's not in charge of the company anymore because this Epstein thing caused a big problem for his reputation.
Yeah. Mo, are people trading this company?
I look at the chart right now, and I just go back to March, and you can see that it's just kind of consolidated in this range and hasn't had much movement. I have to think. I'm going to pull up the daily chart. I just want to see if it's stuck at any moving averages. And it pretty much is. So here you have, I don't know if you guys can see it very well, but you have your purple line and your yellow line. So that's your 50 and 100-day moving average. And if you go back to that same date that I just drew, it's just stuck right at those moving averages. So right now, you're just going to have to wait for a lot more volume. You can see the volume is pretty lax with the exception of a couple days. But even back here, there's not much. You really need a big influx of volume, something to get these big green volume bars, which is going to propel this thing past those 2 moving averages. For now, probably find something else. There's no movement here.
Even with an 8-pillar stock here, Paul, you're saying you're not buying now. Is there a price you would buy or too much uncertainty?
So everyone, what I'm going to show you right now is a preview of our stock analyzer tool. It doesn't look like it's going to be totally different look, but right now the way it's working is this way. So what we're trying to do is, whenever you're trying to value a stock, you need to make assumptions. Assumptions are going to spit out numbers, and every investment is the present value of all future cash flow or earnings, or however you want to look at it. This stock analyzer tool is going to give you two values, one based on free cash flow and one based on a multiple of earnings. So I pull up L Brands. The second I pull up L Brands, it gives me 1 year, 5 year, and 10-year numbers on all these things that matter. Revenue growth, share buyback, profit margin, free cash flow as a percentage of revenue, current PE, current price of free cash flow, okay? So when I pull in, it asks for my assumptions. So I look at this saying, I'm not going to assume 10% revenue growth. Why? Because the company had a shutdown last year because of COVID, so 10% is way too big. I'm going to look at both of these. Now, my job as a value investor is to make conservative assumptions and hopefully find stocks that sell for less. But here on the show, I want to sit there and say, let's assume things that are not as conservative. So if the last 5 and 10 years, it's been a downtrend, I'm going to assume 1% revenue growth, 1.5% revenue growth for the next whatever number of years I want, which we'll pick later. Share buybacks. Again, they issued shares last year. I'm quite sure they're not going to do the same going forward. And over the last 5 and 10 years, they have bought shares back. So I'm going to assume a negative 0.5% share buyback there every year. Next is NPV. How much do I want to make on this investment? This is all based on what you feel comfortable with. Assuming the market, you put 10% in. Now, I will say this. This number should be based on the risks involved. This is a retailer that's already struggling. I personally believe the number should be much higher than 10%. But let's put in 10% because that's what the market should be. Future PE. Again, 15 is the average PE for everything. Profit margin percentage. The average profit margin last year was 10.74. We don't want to use that because look at the last 5 and 10 years. I'm going to be conservative and call it 5%. It's not too conservative, but it's still conservative. Free cash flow as a percentage of revenue. Again, big year last year because of a big rebound from COVID, but it's been around 8.5%, 8%. So let's call it 8.5% because it is increasing. Multiple of free cash flow, let's go to 15. And how many years do you want to analyze? I want to look at a 5-year analysis on this company. Analyze. It plugs in the numbers and it tells me a price per share to buy at. Now, based on a multiple of earnings, $33.80. Based on free cash flow, $57.46. Now, what does this mean? Of course, you're going to have differences with different percentages here and there. Different percentage of free cash flow as a percentage of revenue and a different percentage of profit margin. So what do you do here? Well, first off, the company is currently selling for $65 a share.
Yep.
Both of these numbers are below that. So I would immediately say, I'm not buying this company. If I feel comfortable with my assumptions, then the question becomes, okay, where do I go from here? This is the hard part of it. This is the art of investing. You have two numbers here that are very different. And my personal belief is you base it on the worst number. So I'd be wanting to buy this stock at sub $33 a share is my opinion on this. Is that right? Is it wrong? I don't know. But the point is, whatever assumptions you make are what's going to pop out here. Let me show you what I mean by that. Let's say you believe that all of a sudden the company's going to grow at 4% a year. They're going to buy back 1% a year of shares. The future PE you think is aggressive. People want to pay 18 times future earnings, and their profit margin is going to go to 7%. I'll keep the free cash flow the same because it's pretty consistent. And again, 18 times free cash flow. Analyze the stock now. $61.50 and $75. A much narrower range, and it now makes the stock look pretty reasonable.
Yep.
So that's what I tell you when people say, I believe the stock is worth it. It's all about your assumptions. The more you change your assumptions, the more price change. I can make the stock look like it's a screaming deal and a value play, just like Kathy Wood says about Tesla. If Tesla grows 92% a year for the next 10 years, it's a value play. Great. The question is, are your assumptions reasonable? So this stock analyzer tool, as crappy as it looks here, will be on our software in a much more organized and better fashion and allow you to sit there and make your own assumptions after your research to determine what to pay for every stock.
That's our take on L Brands. We wish them well, of course, being an Ohio company, as we just love Ohio, Paul. And we wish you well as an investor out there. Join our Patreon if you want to join our team. We get in trades. If Mo, we're going to get that team together, Paul, for the little book that beats the market.
Oh, that's right.
On July 1st, we're all going in. So I'm getting some messages from patrons. They want to join me in my little book challenge here. So that's our show. Fondle the thumbs up on the way out. Not too much fondling. Don't get in trouble there with the Epstein malarkey. not too much. Thanks, guys. Love you.